Hi guys and welcome back to Yashi. Today with another real estate update. We had a lot of things happening in the past couple of days, especially when it comes to banks. What happened to the bank run, SVB Bank, and currently it was a New York-based bank that just went on a bust too. It kind of affected some expectations about the market and also some ratios in real estate, which we're gonna address in this video right here. So let's get started. Let's hit record. What happened in the past couple of days, specifically this weekend? SVB Bank failed, as well as another smaller bank. What this caused is a tumble in mortgage rates. Why is that? The failure of banks mostly related to bad investments, and if we want to go specific into detail, the investments were in treasuries who were bought before 2022 and ended up becoming worth less, not worth less, but worth a little less than a purchase price because of rising interest rates. And I do not want to go into detail of this. Resulted in banks losing assets and not having enough assets to back a potential bank run, all people, let's say, pulling money from the bank. This then caused the bank run that we saw, and potentially, which then caused the bank failure, SVB Bank and another bank. The situation caused partially by the negligence of the bank, but also by the consequence of rising interest rates, which is making treasuries cheaper and making banks lose value on their treasury assets that they own, is resulting into people expecting a more dovish Fed in the next update. Even if even if the job market and the CPI report might come a little worse than expected, the reactions that banks are having and the consequences of these higher interest rates that banks are suffering is causing people to think that the Federal Reserve might chill out for a second. And we see this reflected now on the mortgage rates, which dropped to the lowest levels since the past 30 days. We went from 6.6 a few days ago to 6.375. In some cases, I'm seeing also interest rates on the 15-year mortgage out under 6%, which is really good to know. Will it go down even further? We don't know. We gotta see the next CPI report, which will change expectations, and of course the next Fed report. CPI will come out tomorrow. I might do a video about it. Let's go into the downloadable data by Redfin today. How is the real estate market in general? So we know that interest rates dropped, which might cause buyers to come back onto the market. But we also know that banks are going into a very interesting situation right now, which might scare people that maybe we're going through another 2008. So we're gonna see that. The fact is, and that's for you to choose, do your research. This is not financial advice. Let's jump into the real estate data. What do we know about real estate? We know that because sellers are not incentivized to sell and upgrade to something else, the main driver of new inventory is new construction homes, which is resulting in a lower amount of new houses listed every single month compared to the past couple of years. If you compare it to 2020, I believe that the number will be extremely bad. It doesn't appear. Let me try again. Actually, compared to 2020, we're still very low. New listings are still very bad compared to the past couple of years. What about active inventory? Yes, new listings might be lower, but also demand is lower because of higher interest rates. So how is this reflecting to active listings? Is active listings higher because of low demand, or is it still pretty low? The blue line here is the new active listings, which are at the same level as 2021. 2021 was a very bad, market for buyers. It was very competitive and there weren't a lot of homes for sale. So active listings, the amount of homes for sale today, reflect similar numbers at 2021, which was a very strong seller's market, bad for buyers. And the trend, which was increasing in the past year, is now decreasing again. That is bad news for buyers. Median days on the market. How quickly are homes being sold? It is definitely slower than 2021 and 2022, but it is still better than 2020. And 2020, especially in the beginning side, was still almost the pre-pandemic market. I think it was March. We're still under pre-pandemic levels, which means that homes are still very hot and are getting snatched very quickly. I believe, especially entry-level homes. Month of supply, if you were not to add any houses to the market, how quickly will we be able to sell all the homes that are on the market? The number was going up as supply was increasing last year and demand was decreasing, but now it's falling off a cliff again. Apparently we have 16 weeks of supply, which is better than 2021 and 2022, but still worse than 2020. 2019 was already a very, let's say, hot market. 2020 also was before the pandemic. So we're still in a very hot market, nevertheless. Last but not least, this is very important data to see, and this is also very important for you to know. New listing median price. The new listing median price is still above 2022 level. People are listing homes at more than last year, but the sale price for the first time in a while, year over year, is actually negative, as I was saying in my past video. My past video, we were still here where the numbers we saw were the same as the numbers last year. So there was a 0% increase in prices in the last update compared to the year before. Now we're officially in negative territory. Minus 1% price change compared to 2023. And we're talking about the first week of March of 2022 versus 2023. So yes, we can officially say that the housing prices are dropping year over year. Is that a good thing? Is that a bad thing? I don't know. Is it really dropping a lot? I don't think it is that negative of data, because what you really need to compare it to is to pre-pandemic levels. We have inventory that is going up, we have interest rates that are double as much, and prices are only 1% lower compared to last year, which was the best year up until mid-year of the real estate market history. I don't think it's really that good for buyers. Yes, 1%, the trend is actually good for buyers. But will this trend become stronger? I don't know. You got to look at pre-pandemic prices. I mean, pre-pandemic prices, we were around 263,000 in median sale price. We are now at 350, so almost 100K over. That is nuts in 2 years. That is actually 3 years. That is nuts. That is too much. That is crazy. And unless home supply goes up by a lot, I don't see these prices decreasing by too much. Here's an issue of supply and demand, and there's no supply. So either it has to be the interest rates that are making homes cheaper to own, or we need to see a lot of supply coming in, crashing the market because of the demand and supply situation. Guys, I hope this quick update gave you some good insights. Let me know what you think. It is interesting to see what is happening with banks. I don't think this will be something that will then transfer to other banks, bigger banks, private banks like Bank of America or TD Bank. I believe this is more local across commercial banks that have commercial clients, as they have a little bit different rules than normal customer banks. Guys, thank you for watching. Hope you like what I'm doing, and if you have any more specific questions, especially about the banking situation, throw them down in the comment sections and I might do some research and post a video about it. I will do a CPI report tomorrow when it comes out. Let me know what you think. Thank you. Ciao.